My next guest says Canada's strong payroll report for November suggests the country's economic prospects for 2026 could be bright. Let's go to Vinayak Seshasayee, Executive Vice President at PIMCO. Thanks for joining us today.
Thanks for having me.
So the unemployment rate has dropped to a 16-month low, and that follows, of course, a decent GDP report. What do you think is driving momentum for Canada?
Well, I think it's a combination of a few things. First and foremost, the Bank of Canada has obviously delivered a pretty deep rate cutting cycle, lowering the overnight rate to 2.25, which in our view is slightly stimulative for the economy. They've cut rates more than most other developed central banks. I think that is certainly supporting the economy. It's making people more optimistic on the future. The second thing is it's been a month since we got fiscal uncertainty out of the way with a more growth-oriented fiscal budget. And I think that is a big deal for businesses because remember that we were kind of stuck without a real understanding of the fiscal picture for most of this year. And that probably put businesses in a place where they didn't really know what was coming. And now that they know what's coming, they can be a little bit more confident and start to make some hires, even if those are part-time hires. And then I would say, the third factor is that to some extent, I think Canada could be benefiting from low base effects. You have had a fairly long period of very weak growth. You're starting with relatively low comps. And particularly for the unemployment rate, we think a bigger factor in driving the unemployment rate lower is not so much that a large number of jobs has been created. It's just that with no more immigration and a falling participation rate, you don't really need to create as many jobs to lower the unemployment rate, which I actually think is a pretty important thing to also keep in consideration. In fact, we only estimate that with the current level of immigration, we need about 10,000 jobs a month to keep the unemployment rate unchanged.
Interesting. And those looking for a job dropped by close to 26,000. So a decline in the labor force, as you mentioned. And do you think that's a trend we will continue to see?
The immigration side is certainly poised to stay as it was this year for next year. We're certainly far away from the high levels of immigration that we saw in 2023 and 2024. So that is likely, in our view, that is likely to continue. The hurdle for job creation in the economy is not going to be as high as it used to be. And so you could have the unemployment rate drop a little bit further if we got some good traction on job creation. And more importantly, I think, we'll be looking for those part-time jobs to, turn into full-time jobs at some point.
You mentioned youth unemployment, which has been terrible for most of the year, but now is beginning to pick up. Is there an association here with the part-time work growth that we are seeing?
Yes, that certainly could be the case. As you mentioned in your, previous segment, I think, as we get towards the fourth quarter, there certainly tends to be a lot more hiring in several service-focused industries as well as goods-focused industries just to support kind of holiday consumption. So that can certainly be, one of the factors driving the youth unemployment falling. And that's why I think we should also not, be too confident about these numbers. As you know, these labor force numbers do tend to be fairly volatile. We do have another survey, the S summary of employment, which is typically a delayed survey, and that's been indicating something very different from what this has been indicating. It suggests we actually lost jobs in the 9 months to September. So, this is very promising, certainly, but at the same time, I think there are certain headwinds that the economy has to navigate in 2026, and we do need to see other data corroborate what today's survey is saying.
Yeah. So we were talking about some of the part-time work, which could be in retail, but we did see that jobs were lost overall in wholesale and retail. And I'm wondering if you think the tariffs are still the biggest headwind facing the economy.
Certainly. I mean, that is the biggest wild card going into 2026. And particularly if the USMCA were to be, renegotiated into a bilateral trade deal, I think that could certainly leave this uncertainty pending for quite a while. Now, we do think that eventually there is a strong case to keep the USMCA together, both for the US as well as the trading partners, Canada and Mexico. So we think that there's a pretty good chance that USMCA survives, although it could be subject to more frequent reviews. So rather than an 8-year review, it could be more like an annual review. But at the same time, I think trade will continue to be a big source of uncertainty. The U.S. economy itself is also another source of uncertainty. If the U.S. economy were to slow down or stumble, if the AI cycle, which has been a big source of strength for the U.S. economy, that were to start to slow down, I mean, those are all things that could, eventually spill over into Canada. We're also still a little bit concerned about the housing market, particularly in Ontario, and especially with the modest rise in rates that could accompany a stronger job market. That might not necessarily be good for the housing market.
Vinayak, you mentioned tailwinds for the Canadian economy for 2026. We have the budget announcement, a lot of infrastructure push. What else do you see as acting as a tailwind for Canada?
Well, the biggest tailwind in our minds would be a successful renegotiation and outcome to the USMCA, which, we would put a fairly reasonable chance that happens over the next several months. As Prime Minister Carney has been pushing quite aggressively for talks to continue. And we do think the U.S. has largely concluded a lot of the other important trade deals with several other partners. So the focus is likely to shift to the USMCA in coming months. And I think if you got a good resolution to that if anything sees even the existing level of tariffs preserved or even lowered on Canada, I think that could spur a lot of new investments, that could spur a lot of new projects. The fiscal budget itself creates a lot of incentive for new investments, like things like the accelerated depreciation, et cetera, are all, they do create a strong incentive the government has put in place the framework that should allow businesses to want to invest and hire people. And then we don't have a lot of new labor force entrants into the pool because of lower immigration. So I think to us, that combination could set the Canadian economy on a as I said, it's possible that we've turned the corner and we are now recovering and we'll see brighter prospects in 2026.
All right, Vinayak, I'm going to leave it there. Appreciate your time. Thank you so much for joining us. Vinayak's Executive Vice President at PIMCO.